Okay, guys, so this would be our first class on understanding technical analysis. And I just really want to go straight to the point. I don't want to bombard you with the higher highs and higher lows of a thing, but this would be a textbook example for you to understand. Now, when it comes to technical analysis or understanding technical analysis, all we want to do is want to understand what price is doing. Now, the whole technical analysis, the whole aspect behind technical analysis is price, understanding what price is doing at the time. And there are only four things price can be doing. I already have them written down here. There are only four things price can be doing. Is either price is consolidating, is either price is on an expansion level, is either price is retracement, or is either price is on a reversal. Now, these are the four things. These are the four elements you really need to understand. When you open your chart any day, anytime, you want to first ask yourself, what is price currently doing? Is it consolidating? Is it on expansion? Is it retracing? Or are we on a reversal? These are the key aspects you want to understand. You pick in and go straight to what price is doing so that you will be able to react from there. Now, I have an example of a consolidating market in which we have here, which is you can term this to be a level A, which will be like a support level, and a level B, which would be like your resistant level over here. Now, if you see price moving only inside of this box, not giving you a clear direction of what it's doing, we consider this kind of market to be a consolidating market. This kind of market would be considered to be a consolidating market because you are not knowing price is just inside of that box. As you can see here, price is just inside of that box, no clear direction. This is a consolidating market. And I don't really trade this market, but if you want to trade this kind of consolidating market, we just use the trade it with the support and resistance. Your support, your stop loss under, and you take profit in the resistant level. So this is a consolidating market. And this is one thing price can be doing when you open your chart. The next thing that can happen to price when you open your chart is that you can see the price on expansion. Now, this is how an expansion looks like. If you open your chart and you see this, you know that, okay, this price just expanded. It's left one level and it expanded to the upside. Now, I also have a small chart here, so it could be an expansion to the upside or an expansion to the downside. Either way, we still have this to be an expansion. Now, when you open your chart, I told you the first thing you want to do, you want to first know what the price is doing. Are we consolidating? Are we on an expansion level or are we on a retracement level? So this very big push over here is what we call the expansion. So let me just mark it out over here. You can just have all these as well down. So this will be the expansion. This will be the expansion market over here. Now we now have what we call the retracement. Now for a market to be on retracement, the market has already have a clear movement of what it is doing presently. As you can see here, we have this over here. Let's just use the normal higher highs, higher lows, higher highs, higher lows. So this market is currently on an uptrend. So we know that, okay, if this market come here, we are having a retracement. So this is now, this retracement can also be on both sides, either a retracement to the upside or a retracement to the downside. Let me just use this bed to make you understand. So a retracement to the downside would be something like this. A retracement to the downside would be something like this as well. So, but you just really want to understand what price is doing so that you'll be able to like take a trigger from there. Now, I told you, once you open your price, once you open your chart, you want to clearly look what is price doing: consolidation, expansion, retracement, or reversal. We'll still talk about reversal, but let's just talk about this three first. Now, once you notice what the price is doing, once you notice what the price is doing, this is where you now have your reference point. All of this zone in which you see here, which I draw, my chart is getting dirty. Let me take some of this out. Have a reference point. So if I come to the chart today and I see the chart on an expansion, let's say I open my chart today and I saw that the market is on expansion. Now, for me to, I will not just enter inside the market because this price is on an expansion. There is a reference point to entry. There's always a reference point to entry. And for expansion, for a market that just expanded to the upside, your reference point to picking an entry would be a order block. So you're looking for an unmitigated order block over here to take your entry, to place your trade upward, and this would be your take profit at this point. So you're looking for an order block at this point to take entry, to take your targets here for an expansion market. So I'm going to still write it down so you don't get very much confused. For an expansion market, we are looking for our reference point of entry to be retracement. Sorry, let me take this out. So let me just use a new screen over here. I told you we have for our expansion over here. Let's say we have this market go something like this. After all of this move, then we have the market expanded to the upside. Now, for us to take an entry in this kind of market, we are waiting for this market, this expansion, to come back and mitigate an unmitigated order block and go back to the upside. That is the reference point for expansion. Let me write it down. Let me write it down. Okay, expansion. Our reference point for entry would be an unmitigated, unmiti, unmitigated order block. So for an expansion level, when we have a new expansion in the market, we are still going to talk about order block. I just want to take it one step at a time. When we have an expansion, you are looking at an unmitigated order block for your reference of entry. Now, what is the next thing that price can do? What's the next thing that price can do? Let's see. Okay, retracement. Now, for a retracement, let me draw an example of this again. For a retracement, which I told you for a retracement, price has already been giving us a clear sign of what it's doing. This is when we now consider it to be a retracement. Now, once we have a clear sign of what price is already doing, if this price starts coming down, now we consider this to be an retracement, and our reference point for entry would be either a order block around this side or a fair value gap. So we can either use an order block or a fair value gap around this point over here to take an entry for a trending market, which is for a retracement. Uh, Fair value, let me write it down. Fair value gap and order blocks. So for retracement, we have our reference point of entry to be fair value gap, fair value gap, fair value gap, and it could either be a retracement or a order block. I mean, or order block. Sorry. Now for retracement, we could be seeing the price take on a fair value gap or an order block. I'm just trying to give you a key to what we are going to be doing when we go to the chart so that you don't get confused. Now, why I will I put this fair value gap or order block? It's more likely like let's say we have now let me just quickly explain what fair value gap is. Now let's say we have three candles and candle one, candle two, and let's say candle three. Now, if there's a big push in the market, let's say the price is selling, there's a serious big push in the market, you'll likely see that price left each other moving without being like there will be a space. This happened with three candles. There will be a space from this candle over here to this candle. Now, this zone here that is not filled would be our fair value gap. We're still going to talk about fair value gap too, but um I'm trying to just get you very much involved to what we are going to be doing in our previous classes. So if I come to explaining the fair value gap, we'll talk more on fair value gap. So we're looking for either a fair value gap at this point. If there's a fair value gap here, the price can come down to this retracement. For a retracement, the price can either come and fill a fair value gap and go back up. That's why we have that 2 point to be our point of reference of entry. It can fill that fair value gap and go back up. Let me use this too. For a retracement, price can come and fill out that fair value gap and go back up without getting to the other block. So mostly you want to look very closely at fair value gaps when we have price on retracement. You want to look at fair value gaps, and sometimes it can also dip to the other block. So this is what you want to put in consideration. We're still going to be talking about entry models, but this is just like an introduction to what we are going to be doing in the chart. And your take profit point, you don't have to be greedy with this. You don't really have to be greedy with this. Your take profit point will always be at the top at this point over here. So for retracement, we'll be looking at fair value gap and other block as well. Now, the retracement can be either on an upside or a downside retracement. Just like I always tell you, it could be this, it could be in this format or something like this also. We still consider all of this to be a retracement, and you want to look for your reference points would be a fair value gap or an order block as well. So for the retracement would be on this guy making noise. The retracement will be your reference point for taking an entry on the retracement will be fair value gap or order blocks. So what's the next thing in which we have? Let me check the list. So we'll take it one after the other. Now we have a reversal. Before we talk about reversal, let me explain what a reversal is. Now, since you now understand a lot of aspects of what price will be doing, for a reversal means price is already heading one way already. Price is already heading through one direction already. But in this point, the price wants to change movement. We're having now a reversal. Now, this is what we consider to be a reversal of the market. We're having a clear reversal of the market. So this is just a textbook example, mind you. So we already see break in several of these structures, and we're having a reversal. We'll still talk about the likes of what is it called liquidity and so on, but just pay attention to all of these. So let's just use this point over here as the price giving us a change in market movement as a reversal. So the price is reversing at this point over here. Now this is what we consider to be a reversal. After a clear trend, then when your trend is changing. Now mind you, the reversal can be either on an uptrend or downtrend reversal. Hope I'm right with this. So we have this kind of market here would be a reversal. So if you see this kind of thing, when we have a clear uptrend and we have a clear downtrend, this would be the market is now on a reversal. The market is reversing. So let me do this to get you to understand that it can be on both sides. So this is a reversal for an uptrend. So let's say the market is currently selling from here. All of this would be considered as a reversal as well. Then we'll see something like this, broke structures, and now we can consider this also to be a reversal at this point because we have break in series of structures here. Sorry, I'm just doing a rough sketch here. So we can also consider this here at this point to be a reversal of the market. So this is still reversal, and the reversal could be to the downside or to the upside, but you just want to know what price is doing at that point in time. What price is doing at that point in time. So I think okay, yes, it. Now for a reversal, for a market entry on reversal, I would have done this when it's very fresh. Your point of reference, your reference point would be liquidity and this breaker block over here. We have a breaker block over here. Now, if the market is selling, if the market is buying, I mean, we create series of higher highs and higher lows. But when we have a break in this zone over here, now what lies here is liquidity. Initially, the price is supposed to come here, respect either of the fair value gap or other block, but it broke down and took out liquidities. As you can see, all we have here is money lying down. So you take out all of this liquidity. So we have liquidity pool at this point. Now, if the market starts going up, in some instance, it might get to this place, but mostly this point over here would be a breaker block. I'm still going to explain more on that breaker block and how to trade reversal. But we'll see that this point is a breaker block, and in most cases, the price will just come to this breaker block, touch this breaker block, and sell down. So for our reference point for a reversal would be liquidity breaker block. Let me write that down. Now, mind you, we are just doing a clear introduction to technical analysis as a whole. So you can just, if you, this would just be like the basics before going to real charts. I just want you to be able to wrap your head around this. So for this, we'll have a breaker block. Our reference point of entry for reversal will be breaker block slash liquidity. Oh, sorry, I don't understand it. Liquidity. So our reference point for a reversal will be breaker block and liquidity. Now, this is something a lot of people find it hard when it comes to trading reversal, because sometimes you try to catch the reversal and it still keep going up again. So this is another aspect where we'll talk more on as we go alongside this tutorial. But I just want you to grab your head around the whole section of this video, and I want you to go into your chart, try to identify this point in which and this reference point of entry, then before we hit on to the next video. So for just let's go back, let me just quickly grab again. Now I tell you, when you open the chart, there are four things price can likely do: consolidation, expansion, retracement, or reversal. If the price is on consolidation, you can trade support and resistance over here. If the price is on expansion, you open your price and it just expanded. Now, look, this is it here. Your reference point would be a order block. Your reference point would be a order block for a expansion. Now, if you have the price on a retracement over here, your reference point, I didn't write the reference point for all of these. Okay, I read them here. Now, I told for expansion, your reference point would be an unmitigated order block. For a retracement, your reference point for entry will be a fair value gap and an unmitigated order block as well. Now, for a reversal, your reference point of entry will be breaker block and liquidity. Now, so for you can just go into your chart, try to see maybe you can identify what price is doing, and maybe you can try to catch up on the reference points, because this is the basic, this is like the foundation of technical analysis. Before we go into risk management and all of this is the first thing you really need to grasp your head around and really understand. So the assignment on our first lesson would be you going into the charts and trying to grab out what your reference points are. Grab out what the price of any currency pair is currently doing, so that you know what your reference points are. Go into the chart, see, are we having expansion, are we having a retracement, so you know your current zone. So our next, we'll be having a Zoom, sorry, I said a video class. This should be a video class basically, but I was having a little skip here and there. So we'll have a little video class on Telegram, so that if you have any issue understanding all what I've just explained here, we'll just talk about it again on the video class, so that we'll be able to jump to the next class. So see you all, guys. See you all, and see you, catch you on the next video.